Hello everyone, welcome back to another video. In today's video we're going to discuss how we can find short-term trades and even trades that can go on for a day or two. So obviously these trades are going to be directional in nature, but we'll use certain option strategies to position ourselves. We'll just discuss that on the options desk. For your information, there's a new options desk that is going to be launched pretty soon, so we can just make some strategies here based on the analysis that we do. Again, it's going to be a directional strategy, which we'll just discuss. The first of all, what we see here is a daily chart, 15-minute chart. So I prefer this chart, a 15 or a 30-minute chart, for taking an intraday trade, or maybe let's say 80 to 100 points if I'm looking at Nifty, and about 150 to 200 points if I'm looking at Bank Nifty. So the way we are positioned here, as of now, we can straight away see what has been happening over the past few days. What we saw is a balance area, then we saw a break of balance area. Balance area is nothing but, I'll just draw it for you guys. It's nothing but something like this, which is broken down, and this is quite common. Market moves in phases like this. What the market does is it moves up like this and then does something like this, and if it has to continue, it can go like this, or it will come to the previous balance area, test this area, take out the weak hands and go on top. So whilst all this is going on, we can certainly play the directional part. And if you're playing the directional part, what we can do is, when we're in a zone like this, we always target the top end for the other end, and vice versa. But the tricky part is getting to know how can we do that, and where do we enter and where do we exit. So we'll just define our strategies according to that. Firstly, let us discuss what is going on at the moment. So we saw a good fall from this part, and the market has been consolidating. It filled the low volume nodes that were there before initially, and it is now consolidating in the lower zone. The interesting part is it has not tested the the high volume nodes or the continuous POCs that you would have heard me talking a lot in the footprint videos, but these are great ways to take trades off. So if the market gets close to these continuous POCs, we do expect a bounce, which has already taken place. Now what next? Going into Monday, the first thing that we want to see is, I'll just describe how I have reached out to the conclusion that I have. The first thing is that we want to see is a trade above this POC. If we do that, we are certainly going to not only fill the gap but test this area over here, and we will just look into how we can strategize that with the help of options, wherein it is a very low risk. So let us get into why am I talking about these levels in a moment. So firstly, when we see something like this, we see this zone from where the huge downfall came. So obviously the one thing that we can know for sure is this is the region where the buyers were the sellers were distributing, and they caused this. So this is one area to look out for. So whenever we approach this, we'll do the same thing. We'll just discuss the strategy that we're going to deploy. So whenever we approach this zone for the first time, we can expect a 50 to 80 point move on the downside, which we can trade. Now first thing, let's keep it simple. We go here and right click and add an anchored VWAP. Okay, so now this is the zone below which we are trading. Okay, so that is why I said I want to see a break of this POC and a move above this, that is the last Friday's day high. I would certainly target, the first target would be 100 points from here, that is the POC above, and we will just devise a strategy according to that. And if we don't, okay, if we go below this point, that is this volume node, I'll just mark it over here for you. So if we go below this zone, what we're going to do is we're going to target the POC just below this, which is strange that it has not been tested. Has not been tested till now. So it should have been, I thought it should have been on Friday. It didn't, but this is one strange, and when something like this happens, it generally comes back to test it. So again, we'll have to wait for Monday, and whenever in the A or B period initial balance, if it clears this VWAP, we aim for 22,270 or 250, the 100 point move on the top side. Okay, on the upside rather. And if we break this zone that we just said, 22,050-60 zone, we can aim for something on the lower side, that is another 100 points, 960, and so on. Okay, so that is the first part. The other thing is, you can also draw anchored VWAPs from small zones like this. Whenever you see such a big move, you can draw an anchored volume profile or an anchored VWAP, so that you get a context of the thing. So you can straight away see why we are resisting where we are. Okay, it is because of this up move. We did break it, we tried to go above it and we failed, and that is why the first time it failed, and it is holding over here. That is why I said a break of this high of Friday can straight away lead us to 22,270, a 100-point move and a short move. Okay, so at this point it is actually quite not a good trade, and I mean, entering at this point would be too early for anything, because we don't know what the play is. If we break up down below this zone, I'll just mark it for you. It is again two POCs that are quite close to each other. So if we break down below this zone, which is why I mark that zone, that is this one, and if we break below this zone, we are certainly going over here. Nothing is certain, but that is a very high odd that we go over here. So as of now, what we'll do is we'll make a strategy thinking that we will break this zone on Monday. We'll open somewhere here and go above this, so that we can target a 100-point move on the upside to 22,270. Okay, so let's go to the options desk. So this is a new I mean, it's in the beta phase. It will be launched pretty soon. So what you can do is you can when you see this first page, it will be you can have the chain over here. On the left is the call and the right is the put, and what we can do is, right now we're thinking of targeting 270. So what I generally prefer is we go to the put, in the money put, or not at the money, just a little bit ahead, so 100 or 250, whatever. So if, let's say, we will target this 600-700, why I do that is I get a little bit more of points. So I'm targeting 100 points, and if my premium itself is not even 100, it's no use. So that is why I go a little in the money, or 2 strikes in the money. So you can decide. I generally prefer 214 or 15 side. I don't prefer the 50 strikes, but these are the 2 strikes I prefer. So let's say I'm targeting 150, 2200, that is 157 premium, and this is the sell that I've added, and I'll add about 300 to 400 points below that. So let's say a 700 point buy is a spread that I've added. So this is called a credit spread, wherein I've sold an option, a put option, that is 100 points from where we are, 70-80 points, because I'm expecting the market to go above it. Okay, now to balance this, I'll just show you the payoff chart so that everything becomes a lot clearer. What I do is I also hedge myself against a fierce down move. If, for example, I am wrong and the market goes just above it, fails and falls down rapidly. So what do? I go to 22,300. It is just above the strike where I am aiming for. So I'm aiming for 270 is my target. If you're aiming for 400, you can choose this one. So for the moment, let us choose 270, because 300, because 270 is what we are targeting. So our aim should be to get out. If we get the move on Monday itself, our aim should be to get out before this strikes gets in the money. If you want to continue and you feel the move is strong, what you do is you adjust, that is, you take out the strike and move your strike to the next resistance point that we just took out from the volume profile, or from footprint, or from market profile. So let's for now go to 300 and sell this call option. Okay, you can even look at the OI data that you have here, but I rather prefer looking at market profile, volume profile, and footprint charts. And a buy option, that is a hedge or a spread, I will go to 400 points down, and that is this, I think 5.25 is the premium. Okay, so sometimes what I do, if I get if I want to be more aggressive, I can sell these two. That is, if I am expecting the move to be slow. But looking at the markets these days, it is really fierce, and it does give you what you want. For example, 80 to 100 points in about half a day. So let's go to the now how do we check the strategy? We just go over here, click on paper trade, and this is added to the paper strategy. We go to the risk over here on the right side over here, and we see a strategy plotted here. Now this is where we are. Okay, let me just see, did we get the right stuff here? So we have done 22,100. Yeah, okay, so this is where we are, and we're expecting the market to go in our direction for about 150 points. So we'll go to the 4 days to expiry. So if we move above, so we are over here 22,223. So if of course this is the EOD, end of date, let's go to the 4 days to expiry, end of day on Monday. So we are over here. So if we expire right where we are, we get about 1069 rupees, but that's not going to happen, and I mean we don't wait for that. So if we go a little above, like what we are targeting is about 270 and odd, so this is right in the center or somewhere here. So what we get is not if by the end of the about 2000 rupees, what we can expect is 1000, 1200 or 1300 or one lot. Okay, so you'll be surprised by the margin that is required. We can fetch it if you're connected to the broker, to your broker, you will fetch it. It is about 50 to 60,000. So that is quite a good deal. For 60,000 you're getting about 1200 in half a day of move. If by chance you decide to wait and the market does end up somewhere here 22,200 and close here, so you can get about 2000 rupees. Now this is how you can plan it. It is quite a risk-free strategy. Now in some cases, if you're still feeling that the move is going to be slow and it might not be as fast, what you can do is you can add another call option of 22,400, and so what you're doing is in a sense that you are protecting yourself from steep downside or a quick fall of 300-400 points, in which case your 22,000 will get deep in the money. So of course your stop loss is about 80 to 100 points on the other side, which I just go to the chart so that we can so if we break this, for example, and we've gone on top, what shouldn't happen is we come down below this POC and this zone. I'll just mark it for you. So what shouldn't happen for us is we shouldn't be breaching this zone again. Okay, so if this is our stop loss, if we breach below this zone, you can adjust, but what I prefer is taking out the in the money strike and taking out a new position or waiting for the right time to strike again, because if this breaks, we are going to likely test the low of the day. So you can either go and devise a new strategy instead of simply adjusting every now and then. But even if we go down, what happens is we'll go back to the strategy chart, and what happens is that even if we go down, you have a lot of margin. So you will start entering your loss only after about let's say on the day 21,950 or 916 of zone. So you get a 30-40 point buffer because of the decay that happens in a credit spread like this, and by catering for in the call option that has happened here. And if you see, if by adjustment I mean if someone is interested in adjusting, what you can do is keeping squaring of this 22,300 and getting in a new call option and selling a new call spread. So I'll just show you what I mean by that. So if you've gone down below it, you can shift your call to 22,200. okay, because this is the area now which would have acted as a resistance, because we tried to break it and we failed. So the likely destination becomes the next end, and this is your call option that comes into play, and you can hedge it like that. So what happens is if we go down and come back again on that day or the next day, you get a good premium decay, and the price that you get over here over here would be somewhere around again 100,000 to 2,000 on one lot. So this is how you can play and adjust your strategies if you want to. If you do not want to, you can simply come out and let the call option stay, and so on, which we can discuss in further videos. But this is what we are looking for if we are looking for a breakout on the upside. Okay, now let's come to the other chart as well. This is the market profile chart. So what I was saying is I have both the the spot as well as the futures chart. So I've got that for a reason, so that we can have the premiums and the prices quite clear. So the thing that I was mentioning is it was quite weird that we didn't test this zone, that is 960 to 970. It was just about 30-40 points, but still this is a zone that remains untested, and that is why the hesitation that we are not going straight away long at EOD or close of the day. So this is what I expected to be tested, and it wasn't. Again, the zone is from I'll just draw it for you, is because of this that we just spoke about in just a minute, let me make it yellow in color. So the zone is because this is the zone that we were seeing. It should have been tested, it wasn't. Now the other thing that a lot of market profile guys, if you're familiar to it, if you're not, I'll just explain it in brief, is that what we have seen in the past few days is, look at these three lows, they're so close to each other. This is a very small tail. This can be called a buying tail, but the previous low and I mean, the exact lows makes it a weak low, and this is the third time it tested, and this time it is a poor low as well. Poor low means you can see no tail or no single prints like this. Okay, so if you want, you can comment on the you can comment. We can discuss single prints and excess in detail on in a later video sometime. But the third time the weak low takes place, you can look how it is formed. It is, I mean, poor low as well. That is why there is a very high chance that this low will get tested. That is why I suggest you to wait till Monday and see what happens. So what can happen on Monday is, if you open, we can go here and then come back here, or if you open below, we go below 22,050, we can test this zone and then go up. So that is why I just suggested to wait till Monday and see. So if we open here and we going down like we discussed in the volume profile, what we can do is, so we'll just go back to the volume profile. So again, if we break this is the zone we are testing, and maybe it can come down to this level. That is, this is the level that we're talking about. So it can come down to this level after breaking this POC and then taking a support on top. So as soon as we break this, we can target a 100-point move or a 80 to 100-point move on the downside. And that is why I said, if we go below this during the initial balance, this is what we're targeting, and you can devise a strategy in a similar fashion that we just discussed on this shorter side. So what you would do with that is, you will go in the call option. I just show you to how you can do that. So what you can do is, we'll just go back to the chain. So how do you do that? You go back to the in the money call option. So that becomes, you're targeting 900 to 950. So you go to this strike, that is 900 to 950. You sell this one and you buy 200 to 300, 400 points away strike price. And similarly, you want to protect yourself for a sharp up move, and you sell a put from where you got a resistance, that is 21,700 or 600 is the put you can sell. I would prefer if you've approached 22,600 or 700 over there, and a further down the move 400, 500 points buy put option to make it a spread. So it is exactly the same that we did over here for the call option. This is the this is the put. I'm expecting an up move. You can create a similar strategy expecting a down move. Again, it depends on how the market opens on Monday, and you can position yourselves accordingly. So this was the market profile and the volume profile for Nifty. On a similar way, you can do it with Bank Nifty. Again, we will just have a look at what happens in a couple of minutes. So this is the place where we saw a good down move from. Okay, so this is the continuous POC that we saw a down move from. Let me just make it proper. So the down move was from this area, okay, and it has gone down. And of course, whenever we approach this, that is for 47,500 zone, we can expect 150, 200 point move to the downside, a retracement of sorts, and we can make a similar strategy that we just discussed. The other thing that we're going to do is a simple analysis. So this is the place where we saw a down move and sellers step in, and they've been continuing over there. So we add an anchored VWAP, and you can see why these areas have been acting as resistance. And the other one that we saw a steep down move was from this area somewhere. So we can add an anchored VWAP here as well and see how it has been going. So this is the area that we want clearing, okay, to end up reaching 47,100 or 200. So if we wanted to create a similar bull strategy on Bank Nifty, this is the area that I want clearing. Okay, I'll just mark it for you. So this is the area I want clearing. Just a minute. This one, okay. So as soon as it clears above the VWAP, and if you open above it, very good, we're going to test 47,100, this POC that we have here, and the next target is going to be here. So again, you can make a similar strategy that we just discussed for an up move. If by chance we go below this, I'll just delete everything. What can we expect? We'll expect something that is similar on Nifty. There is a gap that is still left unfilled. Okay, so we'll go to the Bank Nifty chart. It's taken a resistance from the single print zone. I'll just go to the Bank Nifty spot as well if I have that saved, but it is let me see. Okay, we don't have Bank Nifty spot. So in essence, what I wanted to tell is that there is if you look at the spot market profile chart, it has taken resistance from the same single print zone. So if we do end up breaking this, what we're going to expect is 46,200, and this is the zone that we expect to test for once. This POC over here, I'll just mark it for you. this is the zone that we expect to be tested for 1, and the POC below that. So this is the zone we can target if we break this zone, this volume profile node that we just spoke of. And you can devise a bear call spread in a similar fashion, that is a credit spread, and accordingly position yourself. So hopefully this video was of help to you guys, and until next time, bye bye.